Hey everyone, it's Brent Bruce over at Rancho Capital Home Loans. Just wanted to reach out today and talk to you a little bit about how the coronavirus is affecting home loan interest rates here in the United States. And that might be a surprise to think that a health issue in China would affect the interest rates, the home loan interest rates here in the United States. And I wanted to go into how that is happening and why. And basically, what it is whenever you've probably heard me in the past in my other videos mention that geopolitical issues can affect home loan interest rates. Whenever there is something globally that would affect the economies of the world, then there's fear that will bleed over into the economy of the United States. And in this case here, we're seeing that. We're really seeing that illustrated well because with the additional information we're getting about the coronavirus, we're starting to hear more about maybe having to even quarantine some people in some areas. This is starting to become a bigger issue where the investors, the stock investors of our country are starting to say, maybe I'm not very comfortable with how this is going to affect the United States economy. So they want to pull some of their chips off the table. They want to pull some of their money out of the stock market. And when they do that, they have to put their money somewhere else. Now, traditionally, they don't want to put it somewhere like just a bank account or somewhere where they're not going to be gaining any type of interest or any other value. So they traditionally move this money over into the bond market. And the bond market, we're seeing the effects. The yield on the 10-year Treasury bill right now is very low. It's at 1.51. And if you don't know much about but the bond market, just know that that is an extremely low yield for the 10-year T-bill. So what this means is that bonds are being purchased. And when bonds are being purchased, there's a huge demand for bonds. The bond does not have to offer as much interest to that bond investor to attract buyers. And that's what we're seeing here. So that's why the yield or the interest rate that is being given on the 10-year Treasury bill is so low. Now, it gets a little confusing, but that is a very good indicator of home loan interest rates. It is not directly what affects home loan interest rates, but it's a good indicator. Home loan interest rates are directly affected by mortgage-backed securities. And that's not something that you're going to see out in the mainstream media or find easily on, CNBC or something like that. But there is what's called a mortgage-backed security, and those are purchased like other bonds. And the more demand there is for mortgage-backed securities, the lower the interest rate that is being offered on home loans. So I just want to point out that we had the Dow Jones today, January 31st, 2020, drop 600 points. That's a huge drop to the Dow Jones. And that money has been moving over into the bond market. The bond market is just doing excellent right now. And interest rates on home loans are very, very low. So if you are interested in refinancing, now is an outstanding time to do that. I can't believe some of the interest rates that we're able to offer to some of our clients. Now, I can't go tell you what interest rates would be for you. I'd have to see your specific situation. But I just wanted to give you an idea of how something like the coronavirus actually is affecting home loan interest rates of today. So if you have any questions on that, please just send me a note, give me a call. My number here is 909-615-6992. Thought it was pretty interesting on how that is affecting our home loan interest rates. Let me know if you have any questions. Have a great day.